This is the Capital Market on Channels Television. Hello and welcome to the program. I'm Edidiong Iwang. We'll begin with some market numbers now, where the Bears managed to come out top after defeating the Bulls in 3 of this week's 5 trading sessions, as the All-Share Index declined by 0.15% week on week to close at 38,808.01 points. Now, as a result of that, the year-to-date loss rose to about minus 4.2%. However, activity levels were stronger than the prior week, as trading volumes and value rose significantly by 42.4% week on week and 17.0% week on week respectively. Now, profit-taking in large-cap stocks, Stanbic Bank, MTN Nigeria, and Zenith Bank drove the weekly loss. Sectoral performance was broadly negative, as the Industrial Goods Index emerged as the week's sole gainer. The Insurance Index led the losers chart, followed by banking, consumer goods, and oil and gas. Well, moving to the unlisted securities market now, the NSE OTC Securities Exchange Index closed the week with a positive return, as the NSI increased by 1.53% to close the week at 767.43 points against 755.84 points last week. Now, NSE investors saw a gain of 8.24 billion naira in value, as market capitalization closed at 545.50 billion. Total volume traded during the week was over 3,000% higher, as 12.853 million units valued at 281 million naira were traded in 130 deals. Now, moving to the fixed income market now, the bond securities market remained bearish as investors reacted to another uptick in inflation and stayed on the sidelines, while also anticipating higher rates at next week's bond primary market auction. The average yield expanded by 103 basis points to 11.5%. Now, across the benchmark curve, average yield expanded at the short, mid, and long segment. On Friday, we had 22 deals worth 7.90 billion naira. At the Treasury bills market now, just in previous weeks, it closed on a bearish note as market participants offloaded positions due to the tight liquidity in the system and the anticipation of higher rates at the week's auctions. The average yield across all instruments increased by about 25 basis points to 6.0%. Now, across the market segment, the average yield expanded by 44 basis points at the almost secondary market, but dipped 6 basis points at the Nigerian Treasury bills market. The Securities and Exchange Commission held the first Capital Markets Committee meeting in 2020 on Thursday, April the 15th and Friday, April the 16th. At the CMC meeting, members discussed issues bordering on the implementation of the 10-year Capital Markets Master Plan, the implementation of the FinTech Roadmap, as well as other matters relating to the capital market and the economy. Well, joining me now to talk more about the outcome of the meeting is Mr. Oke Umeano, the head at the Office of the Chief Economist at the SEC. Good evening, Mr. Umeano. Thank you for joining us on the program.
Good evening, Edidiong. Thank you for having me.
Well, the CMC of the SEC had its first quarter meeting for 2021 to discuss development in the markets. What were some of the major resolutions at the meeting?
Okay. Thank you, Edidiong. We had a good meeting on Thursday. As usual, the meeting was about making the capital market better, doing what we can to continue the implementation of the 10-year master plan, capital market master plan. So we discussed the issues around unclaimed dividends, making it easier for investors to get their dividends. We talked around some little technical issues with the e-dividend system, and resolved to have all the stakeholders come together to, look at these bottlenecks and remove them. Aside from that, we also looked at other things like the new rules that have come out, to help make the market better. One of them is the one on the warehousing and the collateral management for the commodities market. As you know, we are trying to deepen and enlarge the commodities market in Nigeria. And we have certain rules that have been exposed, and some of them have even been issued by the SEC. So we had everyone who is involved, talking around it, and to know all the areas we need to touch to ensure that we have a vibrant commodities market.
Mentioned unclaimed dividends. The SEC has halted the activities of some capital market operators, which frustrate the e-dividend mandate process, leading to a rise in unclaimed dividend in the market. Now, can you tell us more about this?
Okay, the system was designed to make it easy for investors to access their dividends when they are paid. And we also, in designing that system, expected that we would not have new unclaimed dividends. What I mean by new unclaimed dividends is that after the time we started implementing the e-dividend system, that no new dividends paid by companies would accrue into the unclaimed dividend pool. But we found that an unacceptable amount has been, accruing in that pool. I know that a lot of it is because of identity management issues. There are people who bought securities, who bought shares in the past, who haven't been able to, sort out their identity issues. So some unclaimed dividends are amassing because of that. But also we want to ensure that the system works in such a way that people who already have mandated their accounts for e-dividend will get their dividends, so that such dividends do not enter the pool of unclaimed dividends again. So that's what we're talking about. So it's not such a big problem. It's just that when you have a system, certain parts of the system could constitute bottlenecks. And we've identified these areas, and we are working on taking care of them.
Okay, I'm glad you would mention that, because one would say that in the bond market, for example, we hardly hear issues of unclaimed coupons or coupons not being paid. So what is being done differently in that space that can be applied to the equity space?
Okay, in making that comparison, it's important to understand that the bond market in Nigeria and the equities market have slightly different structures. For instance, the bond market is dominated by institutional investors. So so the number of individual investors you have in the bond market is is much lower than what you have in the stock market. So that's the main difference that makes it a bit easier, to handle coupons when it comes to bonds. When it comes to dividends, it's a whole different ball game. You have individuals in far-flung places who have, been investing in the market for donkey years. So it's a bit difficult, to get some of them to come to, mandate their accounts for dividends. But we are working hard. We are trying to make sure that we sort this out, so that we'll put the issue of unclaimed dividends behind us.
Well, still at the CMC meeting, the DG of the SEC said the Commission is working with the CBN on crypto trading regulations. Now, what's the update on that, and how have discussions been so far?
Okay, those weren't the exact words. He said that the SEC, was working with the CBN to understand the market and see how best we could regulate the market. So we haven't really started writing regulations on that. But yes, we're engaging the CBN. The CBN, from day one, when they made that release, said that they were open to discussions. And you know that before that time, in September, the SEC had released a statement, classifying digital assets and saying which ones fall into the purview of under the purview of the SEC and how they would deal with them. So with the CBN's release a few weeks ago, we had to recalibrate. So we have started these engagements. We are speaking with CBN. CBN has told us what their concerns are. We're very genuine concerns, and we are together looking at how best to approach regulation of that segment of the market.
Well, while we wait for that, the SEC is at the midpoint of the implementation of the Capital Market Master Plan to further deepen the capital market. So what has been achieved so far, and what more is left to be done?
Okay, a lot has been achieved, Didion. We just discussed the e-dividend issues system that we have put in place. That's one of the results of the capital market master plan. If you remember, in Nigeria some years ago, if dividends were paid, you had to wait to get slips of paper, checks. You could cash. But we are done with that regime. You also remember that in days of the past, we used to have share certificates. These days, we don't have that again. We have fully demutualized. We have dematerialized, not demutualized. Sorry, we are fully dematerialized, so you don't have those physical certificates. And we have also, strengthened the rulemaking system, and we've also automated processes. All these were part of what was contained in the capital market master plan. Going forward, we are going on with work on the non-interest capital market. That's a very important part of the market for us. And what we are doing now is engaging stakeholders, creating awareness, building capacity. Just a couple of weeks ago, we engaged the IFSB, Islamic Finance Standards Board, and we had a 4-day capacity building for people in the market in terms of the non-interest capital markets. So that's an area we are hoping to develop. Another area is derivatives trading. As you know, we have released the rules on derivatives, and we are gradually building a market, a derivatives market. We've approved 2 central counterparties. We are putting things in place to have that market going. So all these are things contained in the capital market master plan.
Well, recently, the SEC issued a directive on the proliferation of unregistered online trading platforms, saying that foreign securities should not be traded on these platforms. Now, what led to this directive by the SEC, and what is the Commission also doing to find a way to put some regulation for investment tech rather than shun them? Okay.
The SEC is a responsible regulator. And when the SEC sees things going amiss, it's the Commission's responsibility to take action. Some players, started, making these foreign stocks available for domestic investors without going through the approval process of the SEC. The capital market is a regulated market. No player, no entity can go into the market, and set up shop without going through the necessary approval process. These approvals are for investor protection. They are to curb illegal activity. They are to ensure that we have fit and proper people in the market. So the SEC has the responsibility to do all this. The SEC has the responsibility to, regulate a market that is fair to all. And when players come into the market without going through the proper channels, then it's a problem. So the SEC identified this and just sought to let everyone know what to do, the right thing to do. And then coming to the second part of your question, what the SEC is doing in terms of enabling innovation, and helping these fintech companies come in and, play in our space. The SEC has been very proactive in terms of helping these fintechs get registered and do things the right way. One of the things the SEC has done in the past 2 years is to set up a fintech and innovation office. We have that office in the SEC right now. And that office was set up so that companies like these can approach the Commission, say what they want to do. And the Commission is able and willing to guide them, to do these things within the rules and regulations that guide the market. That's very, very important. It's important that anybody who wants to play in the market does so within the rules and regulations. So that's what the SEC has done. So it's very easy for anybody, any fintech, any firm, any entity to walk into the SEC and ask how they can get A, B, C done. The SEC is willing. The office is mandated to help. And we presently have a number of these fintechs going through the approval process. So it's quite unfortunate that a few would decide to, just set up shop and ignore these necessary steps and begin to trade.
All right, Mr. Mano, thank you for clarifying that, and thank you for sharing your thoughts with us on the program.
Thank you, Adidiang.
Mr. Oke Umeno is the head at the Office of the Chief Economist at the Securities and Exchange Commission. Well, we'll turn our eyes to the unlisted securities markets when we return from this break. Please stay with us. Welcome back, and thanks for staying with us on the program. Nigeria's unlisted securities markets, as NASE OTC, announced the admission of the securities of the Nigerian Exchange Group PLC on its trading platform. Now, this comes after the successful demutualization of the Nigerian Stock Exchange, now known as the Nigerian Exchange Group. The shares of NGX were made available to be traded by licensed participating institutions or authorized traders registered on the NASE platform on Tuesday, April the 13th. But before we delve into this, let's get some understanding of the unlisted securities markets, and who best to take us through these other than the Chief Executive Officer of NASE OTC PLC. Good evening, Mr. Bola. Thank you for joining us on the program.
Good evening. Can you hear me all right?
Yes, I can hear you.
Excellent.
So let's just start with understanding the NASE as a licensed self-regulatory organization by the SEC. It's licensed to trade all registered securities within the meaning of the Investment and Securities Act as an OTC securities exchange. But what does this really mean?
What it means is that any security that is registered with the Securities and Exchange Commission is a public security, and any public security, there's a rule by the Securities and Exchange Commission that every single public security must trade through a public outlet, a public market. You have got at least 6 markets that are registered by the SEC to do this. One is the stock exchange, that's the oldest, but then you have NASD, you've got FMDQ, you've got 3 other commodities exchanges as well, and so any of these platforms can actually trade any instrument that is registered by the Securities and Exchange Commission. Now, what that also means is that the Securities and Exchange Commission has vetted these instruments and ensured that they meet a certain standard of disclosure, a certain standard of acceptability to be open to the public to invest in.
Well, recently, the Nigerian Exchange Group was admitted to trade on NASD. Now, what was the debut like?
As you can imagine, the Securities Exchange, the NGX as it is now, or the Nigerian Stock Exchange, started off 61 years ago as a mutualized, limited by guarantee company. And so for the last 60 years, we've operated like that, which means that there are some members of that organization who were guaranteeing the existence and the liabilities of that company. Now it converted into a public company, got itself registered at the Securities and Exchange Commission, and then it becomes a public investable instrument. It has taken roughly about 10 years for this to happen. So you can imagine the kind of interest there would be in both buying and selling that security once it hits the market. So the first 2 days have been quite robust trading going on that security.
What about competition now? Is there no conflict there?
So the shares, I can understand your allusion to competition. Indeed, you have got different segments to any capital market. Any capital market is a continuum. While there will be overlap in terms of what we do, all of us provide investment instruments to investors, and we also assist issuers in raising funding. There is a difference in the approach that we all take to providing these services to both issuers and investors. In the case of NASD, it is based on the principle of creating an orderly environment for investors to buy and sell their shares, and also focused on ensuring that there is broker responsibility to their clients. I believe that the stock exchange probably has the focus of ensuring that the issuers meet a certain standard of reporting to the public, which is not the focus of NESD. So there's a difference in approach, and again, there's a difference in the entry methods into the market. And so ours is a market, and the way it was introduced into the NESD market is that the security itself was introduced for trading as opposed to the Nigerian Stock Exchange itself applying to be listed. So there's a subtle difference in the way it came into the market. And it's not a competition thing.
Well, glad to hear that. But could you walk us through the benefits to both issuers and investors of being active participants of the NESD?
For issuers, we provide an easy entry market, lightly regulated. The regulator is not particularly heavy. Lightly regulated, as I said, our focus is more on ensuring an orderly market, ensuring that what is promised is done, as opposed to regulating the issuers. So it's slightly regulated for the issuers. It is very easy to enter and to exit that market as well. So you can bring your shares in at a certain time very quickly. We onboarded the shares of NGX, for example, within 48 hours of it being available. And it's an easy exit market as well. It also offers listing opportunities. You can raise rights. You can raise any other form of capital that you want on that platform as well. That's for the issuers. For investors, it is an orderly market. We use an automated trading, automated matching engine. It goes through the CSCS for clearing. It has a T+3 clearing cycle. So it's very orderly, quite disciplined, with information on prices, with transparency on what has been traded at any one time as well. So for both of them, it's a win-win and a very light market.
So with all the benefits that you've mentioned now, why is NASD not a household name yet?
To those, I think there has been a lot of focus on the more traditional exchange. In that market, we have got a community of 140 brokers, 140 brokerage houses, and over 200 brokers. We have got 40 companies trading on that platform. Probably the most well-known right now would probably be NGX. But the shares of CSCS, for example, is trading on that platform. The shares of Dufil are trading on that platform. So there are quite a few securities trading on that platform as well. To those who do know, and we used to be appearing once in a while on channels, to those who do know, it is quite well known. I believe that it would receive a lot more coverage as it expands.
Well, we'd also be looking forward to that. But do you have major institutional investors like PFAs, for example, trading regularly on the market?
Well, the market tends to see a lot of bulk movement. So rather than it being a day trading market where people would get in and out and there'd be a fair deal of movement in the price of the shares during the day, what we tend to see on that market are the larger block trades, either to move a large chunk of securities from one holder to another or a major restructuring and so on. That's what we tend to see a lot more than trading activity on a daily basis, buying and selling in and out of shares. That said, yes, we do see we also see more of the private equity investors, longer term investors, rather than the PFAs coming into that market. I think the PFAs over the last couple of years probably had more of a focus on fixed income instruments as well, which are not really heavily traded on that platform.
Okay, so recently we've seen a bullish trend at NASD. Now, what's driving those sentiments?
First, I could say is performance of those companies. You would see the power, and I wouldn't want to single out any one company and say this one is doing particularly better than that one. But there is a certain level of performance on some of the companies that are in there, and I think as more and more investors start analyzing investment opportunities and start looking at the potential and the returns and the value for the naira that they're putting down in investments, they are tending towards some of those securities. That's the first thing I would say. The second thing is there is a certain amount of pent-up demand as a result of how slow last year was for everyone, both investors who were invested and those who wanted to buy. It was a slow activity period, and I think some of that is now being released and it's manifesting in terms of how the prices are moving on the market.
All right, Mr. Jomale. Well, we'll keep our eyes at the market and see how things play out in that space. Thank you for spending your time with us tonight on the program.
Thank you very much for having us. Thank you very much.
Bola Ajomale is the Managing Director and the Chief Executive Officer at NASD OTC Securities Exchange. Well, that's it on the program tonight. Thank you for watching. I'm Edidiong Iwang.